Welcome to the Alternative Assets Podcast with Stefan and Wyatt. This is not another podcast about stocks or venture capital. This is about the wide world of investment opportunities that aren't discussed as much. Our website and newsletter is at alternativeassets.club, where you can find a transcript of this episode and many more unique investment ideas worth exploring. Now, let's dive in.
Welcome, everyone. So we cover a lot of assets here at Alternative Assets. And one of the ones we've been slacking on a bit is domains. Well, that ends today because our guest today is Alex Drew. Alex is the founder of ODYS, that's ODYS, marketplace for buying aged domains, domains that have a history and are chock full of valuable link juice. Alex and I have been working together for about a year now. He was actually our very first sponsor of the newsletter, way back when we were on Substack. And we're really excited to have him. We're going to spend the first half of this podcast episode discussing domains, why they are such an interesting and valuable alternative asset class. And we'll spend the second half talking age domains, which is Alex's specialty. It should be a great discussion. Without further ado, Alex, welcome to the show.
Thank you. Thank you for having me.
Absolutely. So, Alex, where are you based?
So right now I'm in Estonia, in Tallinn. The company, which is the holding company for ODYS, is also based in Estonia. And my background is basically just a passion for technology. I've been traveling a lot for the past 10 years. And right now I'm in Estonia. So my mother is Eastern European, so I've kind of follow along and try to, get back to the roots, so to say. But in terms of the base, I've really just I've been seeking, for the Silicon Valley of Europe, and I found it in Estonia, in Tallinn. So I decided to, create a company here with my partners and co-founded ODYS, which basically resembles my passion for domains throughout the last 20 years or so.
So cool. I must say, I absolutely love Tallinn. I only spent, 3 or 4 days there a couple of years ago, but man, I was blown away at how cool that city was. I definitely sense it's becoming the Silicon Valley of Europe. It's definitely one of those places that punches well above its weight. A ton of cool companies have formed there. I believe Skype is from Estonia originally. Is that right?
Yes, Skype was originally from Estonia, and I believe TransferWise is Estonian as well. I'm not here to praise the government on anything. I'm not really keen of politics, but they just made it so cool to launch a startup. It's so easily, the nation is so digitized, and it's so easily to register a company and get started, so little bureaucracy. So it just makes it awesome for entrepreneurs and digital nomads, to get started with their business online.
Very cool. Yeah, I know they started that digital nomad visa. They were like one of the first ones to do something like that, and everyone else has kind of copied them since. But very cool. So tell us about your background. How did you get involved and started in this world?
So I don't have any background related to domain investing. My only background is really my passion for technology, my passion for the internet, and my passion for anything digital. Like the very first moment I heard about the internet as a thing, I kind of, it got me so lured in, it got me attracted. I kind of fell in love with it. And I was always fascinated, by having a presence online, by, having a URL that belongs to you, you can refer to when talking to people, So the very thing of being a webmaster, as they used to call it back in the days, was really cool. So I thought I want to be a webmaster. And being a webmaster always started with, owning a domain, having a domain you can refer to, you can send people to. So domains shortly became my passion. Like I kept studying and registering them, figure out the best registrars, the best deals. And most of the time, this is the problem of all investors, an issue like you don't have any development plans. Like in 99% of the cases, you don't have any development plans for the best domains you own, but still you kind of hoard them and invest them for the long term because because of the passion, because you're addicted to investing in domain names.
That's the sense I get from a lot of domain investors. There's an addiction there for sure. But addiction aside, what makes domain investing great? What makes domains such a great digital asset?
Well, we're already in the digital era, and there is absolutely no turning back. And I think you don't really exist these days as a business or as an entity, as an influencer, as anyone, if you don't have a digital presence, if you don't have a domain. And most of the time, it's all about having a domain name you can relate to. And as much as, social media plays a huge role, like social media accounts, you can't really, at the end of the day, as easily trade them or sell them if you at some point decide to, do an exit as you would with domains. So you're basically, swimming in gray hat waters when you want to sell your Instagram account or you want to sell your YouTube account, even though some companies don't quite, say you're not allowed to do that. But at the end of the day, you need a domain. So domain investing is great because everyone relates to their domain when it comes to a startup company. It's just, not being a tangible asset and yet having playing such an important role in anyone's business just makes it absolutely fabulous. And the demand for good domain names, especially domain names one can use to build a brand on, is growing exponentially. Like if I remember the demand for domains like 20 years ago, and now it's just a huge growth.
It is amazing how the test of time, especially like you think of like .coms, when the web kind of first started, everything obviously was basically a .com, .gov, .edu. Those are like the only like three that you ever saw, maybe like .org, right? And then you started seeing .nets pop up, and then there was some other ones, and there was thinking for a while that .coms wouldn't be as valuable going forward because there's so many alternatives, right? There's so many extensions, TLDs. So it wouldn't really matter if you had a .com. And that's kind of true, but it's also kind of not true, right? Like having a .com still matters a lot. It's not the only one that matters, and a great domain is more than just a .com, but it speaks to a larger question I have, which is around valuing domains, right? Domains, to me, they're so tricky to value. And I think the reason is because what might be valuable to one person, is like garbage to someone else, right? It's like one person's trash is another person's treasure. For a certain domain, one person might be willing to pay 30 grand. Someone else, it wouldn't be worth, 30 cents. And I know there's a couple of companies that have tried to, make sense of this and have more accurate domain valuation tools. Estabot is kind of the one everyone knows. I'm not sure how great of a job they do. So I want to ask you, like, generally speaking, like what do you see in the market? What really makes a domain valuable?
Yeah, so first of all, on domain valuation and why it's tricky. In my opinion, all assets, regardless of the class, have some kind of emotional side of things attached to them. And as a property owner that is emotionally attached to his property, he's not willing to sell. I mean, even there's a chance for him to consider selling. So it's just best to pay whatever he asks, otherwise you stand no chance of owning the property in the first place. And then when it comes to domain names, exactly the same applies. There are cases when some domain owners are so emotionally attached to their domain, they simply do not consider selling. And then this kind of bumps up the price. And domain valuation tools can't really sense that emotion attached to domains. And in my opinion, domain valuation is tricky mostly because as long as we have this emotional side of things attached, the domain is worth as much as someone is willing to pay for it. Right now, for example, we have a very strategic domain name that we're willing to buy for our business, and money won't simply solve the equation, regardless of how many historical comparable sales we have, regardless of the valuation of the domain, regardless of the offers we've made the seller. The seller is so emotionally attached to the domain that he's simply not willing to sell. And he's not an investor, by the way. He's just a former owner of the business which no longer exists. And the domain name was an important part of his adult life and just a good memory, perhaps. And he just doesn't want to let it go. I still own a couple of these domains myself, like domains that I registered in the late 90s, and I'm not willing to let them go, like regardless of the price. They're just too important for me, remind me of the early days. It's just something way too valuable for me to sell. And some of these automated domain valuation tools simply do not consider this. I mean, in some cases, they just in some cases, these tools will just offer a random valuation based on historical searches, or some comparable historical sales on some comparable sales. But most of the time, all the sales happen in privately, and there's really no way for someone to be able to assess the real value of a domain. A recent example is actually Rick Schwartz, who is known as the domain king, selling gobet.com for close to $1 million. And he shared that the history of which led to the sale in a recent tweet. And he said that he kept saying no to offers for like a couple of years until the buyers agreed to pay what he thought the domain was worth. Because at the end of the day, if gobet.com becomes a multi-billion-dollar company, the $1 million price they pay for a domain is really just nothing, compared to their exit plan or whatever they can be valued for. So Rick Schwartz's opinion on evaluating the real price of the domain is that you cannot really pay what an automated tool tells you to pay for a potentially life-changing event, a life-changing domain, a domain that can lead to events that change your lifestyle, create a huge business. So that's why the automated domain valuation tools are like a two-edged swords. On one hand, you can educate buyers that have no idea about domain investing, on the intrinsic value of a domain. And on the other hand, you can get in trouble when a potential buyer, references to the STBot or Google appraisal valuation of a domain, telling you that you're charging way too much for the domain. So it really depends on the circumstances, but most of the time it's just good to have them for the general public. People who aren't really domain investors don't dwell as deep into the domain industry. But oftentimes these don't by far lead to a real domain evaluation, like a realistic one.
It's such a fascinating market. I think that there's something to be said about not giving into, kind of pressure to lower the price on a domain that you think is really valuable, because someone that really wants it is willing to pay a lot. It's just a weird kind of dynamic where it's, if you have your heart set on a domain, and like you said, that happens all the time. I mean, emotion plays a huge part in this. If you have your heart set on a domain and let's say the seller's asking 20 grand, it's not like you're ever going to lose that emotional attachment to that domain. You're always going to want that domain. If you don't have 20 grand, you're going to have to make a trade-off and a sacrifice. I look at alternative assets and it's like, well, I would love to have alternativeassets.com. There's absolutely no way in hell I can afford that. Even if I could, I'm not sure I'd want to pay that much just for the .com. But if you're the seller, you have no incentive to lower your price, because eventually somebody's going to want and will pay that price. It may take 10 years, but 10 years at the price you want versus, 10 months at a price you don't want. It's just one of those rare markets where it actually seems like it makes sense to kind of hold out for that one hyper emotional buyer who is willing to pay up. Would you say that's accurate?
That's extremely accurate. Like GoDaddy has had their best year this past year with all the the coronavirus crisis, and the digital economy for both brick and mortar businesses and online businesses is just getting started. I sincerely believe we're just seeing the growth of the domaining industry. And regardless how much emphasis some investors or some people put on alternative TLDs like .furniture or .assets or any other new type of TLD, .com still remains kings. .coms would be like what Bitcoin is for the crypto economy, just dominates the market. .coms is like owning a piece of property, a piece of land in the center of a big city. So you can't really compare that to anything else. The funny thing is, even most crypto businesses these days strive to get the .coms, regardless, of how much the industry is progressing. Like you have domains like sushi.com, which was recently acquired by a crypto swapping, startup, and you have crypto.com, which is quite a big startup, and a few other great domain names like Binance.com and a few other really big both centralized and decentralized marketplaces that operate by owning the .com version of their brand.
The metaphor with crypto and Bitcoin is definitely apt. I do think that there's a lot more value in .io than let's say your average kind of cryptocurrency. Although these days, who knows? Especially with what's been happening with Dogecoin and all that. But yeah, it is definitely an interesting metaphor. And then of course there's also the .crypto TLD, which is being sold through Unstoppable Domains. So that's a whole other sidetrack we can go down later. But I think before we get to stuff like that, we should talk a little bit about just the marketplaces for buying and selling domains. While domain investing is still a bit niche, there's been millions of people that buy domains every year. They don't think of themselves as investors, even if that's what they are, but they buy a domain because they have a great idea for a side project, right? We've all been there. You've got this great idea for a side project, and the very first thing you want to do is just lock in that domain before someone else gets to it. Lock in that .com. What mostly happens is the side project doesn't really get off the ground or go anywhere, or you don't have time, or a million other reasons. The domain basically collects dust, and it usually just kind of expires. Maybe you tried to sell it to your friends in a Facebook group or something, or maybe you put it on a marketplace, but there's many, many domains that are bought each year and nothing happens with them. I think we can definitely agree with. So let's talk about those marketplaces. What are the biggest marketplaces for buying and selling domains? Like, who are the biggest players in the industry?
Volume-wise, I think the biggest players in the aftermarket of domains, especially domains that are about to expire, is GoDaddy. If talking about domains that are being sold still during the redemption grace phase, and this is the phase where the former owner can pay a fee to GoDaddy and get the domain back if they want or can. When it comes to domains that are dropping, so domains that will inevitably drop and the former owners don't have a chance to get them back, we're talking about huge domains, .com, which owns Dropcatch.com, which is by far one of the biggest drop catchers out there, especially for .com and .org domains. And then you have Web.com, who is a direct competitor with Dropcatch.com, who owns Snapnames and Namejet. Like, these are the biggest players when it comes to expiring domain names by far.
Can you tell us a little bit about this idea of a drop and how that all works? Because I don't think everyone understands this concept of drop. So tell us what Dropcatch does specifically.
Yeah, so I'll try to avoid getting too deep into the rabbit hole because there are a lot of technicalities involved here, and it shouldn't really matter like to most people who are domain investors. But basically, if you don't have a means as a registrar, if you hold a portfolio of domain names, if you don't have a mean to monetize those domain names via an auction held either by your company or a partner company like GoDaddy or Namejet, you're forced to leave those domains go through the full life cycle of a domain, and they inevitably enter a phase which is called pending delete, from which you cannot buy them, and kind of claim ownership. You have to let them drop from the registry, and as soon as they drop, we have drop catching software, which is very sophisticated software, which requires having multiple registrar licenses and servers, and the fight is in between these really big players. Right now we have hugedomains.com, which operates dropcatch.com, and we have web.com, which is a really big company who operates snapnames.com, and they kind of have a lot of attempts to register valuable domain names the very second these expire. Like you don't get, and then they list them for auction within their own portfolio and companies. So this is how a drop happens. If you were to be a registrar and you had a contract with GoDaddy, like the moment your domain expires, you can list it for sale via auction and monetize the domain name. When the former owner doesn't want or cannot renew it, In any other case, you just are forced to let the domain drop unless you want to renew it yourself. And then, considering most of the domain names don't hold so much value, just have to let them go away, for the drop.
Got it. Okay, so basically, if I understand correctly, as soon as a domain goes unpaid, right, the owner no longer has the right to that domain. It then enters this kind of purgatory state. Is that kind of a way to think about it?
Yeah, it's called redemption grace period. But usually the former owner does have the chance to renew it during the redemption grace, which lasts anywhere in between 30 days to 45 days, depending on the TLD or registrar and their terms of service. But you can pay a fee and get it back.
Okay, but if it expires past the grace period, though, that's when it's a open season, free for all.
Yeah, it kind of goes into a 5 days pending delete phase where it inevitably drops from the registry, not only the registrar, but the registry itself. And then it's kind of free to register for all, exactly. But usually it's absolutely, there is no chance you can hand register it, especially if talking about really valuable domain names. So the fight is in between the big players that just hit with multiple curries, the server, and try to get it, register via multiple automated attempts to register it. And usually it's just a little bit of randomness involved, timing, lags, depending on where the servers are positioned closer to the registry, so forth. So there are quite a lot of technicalities involved here. But at the end of the day, it's a really, really big fight, because sometimes like these players can register the domain for like, let's say $8 and then auction it for, hundreds of thousands, depending on how valuable these are. Like these are some really rare catches, but it's worth, pursuing them for sure.
Wow. So it's almost like there's a high frequency trading aspect to it where there's actually server location matters. And oh man. So every single day there's what? Just thousands and thousands and thousands of drops.
Yeah, I think even more than that, like we're talking about hundreds of thousands of drops. Just the .com.
Every single day, hundreds of thousands of drops. And so these big companies presumably have software to determine the most valuable domain. I mean, there's no way a human could see all those and know what to make bids on or which ones to attempt to register. So there's presumably all sorts of software these companies have, I'm guessing, to figure out which of those 100,000 are worth registering. Is that accurate?
Not really, because usually they don't really care. They just provide, their service and their software as a service. It's up to you to actually do your own due diligence and figure out which one do you want. And then you kind of place a request, which is called a back order with them, and you express your willingness, to either pay them when they catch the domain for you, or participate in an auction if there are multiple, entities who want the domain. If you're the only one who, kind of placed an order and back ordered the domain, if they manage to catch it for you, you pay them. If, let's say, we both want alternativeassets.com and it's expiring, if they manage to catch it, they're going to do a 3 days auction in between us, so whoever pays more gets the domain.
Got it. Okay. Interesting. So that's the primary way that most dropped domains are purchased by these big companies. And then what do the big companies do? The big companies, how do they sell them typically?
Usually the big companies who are in the, drop catching business, they do not sell the domain names. They just take orders. So they provide it as a service. And when kind of you agree to hire them to catch that particular domain, you agree to pay them for every successful catch. So if you don't pay them, they just ban you and they no longer allow you to place back orders via their service. But so their business model is software as a service, basically. you just make use of their technology, of their software, and they're not a marketplace per se, that they're just a means of getting those domains because they have the technology and they have heavily invested in the infrastructure, and so they have the means to actually provide it as a service. You and me would require millions of dollars and a very big development and engineering to get that all done. So it's not realistic, to compete with them at that level. But on the other hand, we have other marketplaces, like Afternic, who is owned by GoDaddy and has a portfolio of millions of domain names, plus you can list your own there. And then we have Dan.com and we have Cedo, and we have some other marketplaces that do provide a large portfolio of domain names and allow you to both buy and sell via them, and are indirectly related to catching domain names. So it's a completely different business. And usually these are the three biggest marketplaces as far as I know. And most of the time, it just, when you want to increase your chances of selling a domain name, of getting it exposed, to the market, it's the best approach is to list it everywhere, both in Afternic, let's say Dan.com, and even Cedo at the same time.
So how do Afternic, Cedo, Dan.com, so these are a little bit different, these kind of companies, how do they obtain their domain supply?
So usually they have an Uber-style approach. So they kind of connect buyers and sellers. But as far as I know, Afternic, which is owned by GoDaddy, has a very large portfolio of domain. And GoDaddy doesn't shy away from publicly announcing their domain portfolio acquisitions. They recently bought like millions of dollars worth of domain portfolio. Like they buy them in bulk because they understand which way the market is going, and they know the value of domain is going to increase over time, especially .coms. So they are buying a lot of dictionary, words.coms, a lot of pronounceable names, a lot of acronyms, a lot of brandable domain names, and just listing them for sale. Sometimes there is no way to kind of differentiate between your domain and GoDaddy's domain in a marketplace like Afternic.
Wow. Yeah, I mean, GoDaddy would have so much data on search intent. And so, I mean, you're saying that they're actually buying their own stock, and in the GoDaddy domain marketplace, it may be coming from them. They may be the owner. If you're going to buy a domain from GoDaddy, it might be that they actually bought it.
Yeah, right now, GoDaddy has connected all their marketplaces into the same. So if you go to GoDaddy.com and you type like alternative assets, if it's listed for sale in Afternic, you're going to be one click away from buying it, if you can afford it, obviously. So if you type alternative assets into GoDaddy, they're going to say like, buy it now, because it's listed in Afternic. So they are connecting all the dots here and making it extremely easy. So if you have a domain for sale, you list it in Afternic, and they kind of have like Afternic, GoDaddy, Cedo are one of the few marketplaces with real traffic, and marketplaces which can kind of help get your domain closer to a sale, an actual sale, not just off a park page and then letting it be up to you to figure out how to sell it. They actually bring you buyers if you have like good domain names.
Yeah, definitely. I haven't done a ton of domain flipping, domain investing and selling. Every now and then, like I probably literally buy like 20 domains a year. Here's what happens to them. I'd say 10 of them, absolutely nothing except collect dust. Just spur of the moment impulse purchases. I'd say another like 5 I try to sell on those marketplaces or Flippa or other marketplaces. And then like 1 to 2 I actually use, maybe 2 or 3 I actually turn into, a side project or another project or something like that. So I've had definitely some luck with selling domains in the past. I've also put domains up for sale, which I thought were valuable, and it's just like total crickets. And the problem is, I know that someone out there will find it valuable, really valuable. It's just, I don't know if I want to keep renewing it every year, right? Like every year you get that notice and it's like, do you want to renew? And you're like, oh man, I know there's someone out there who wants it, but it might take 3 years to find them, So I end up usually just kind of letting them wither, and it just feels like a waste. I don't know.
Yeah, one piece of advice is to do your best to expose them. And at the moment, the best thing you can do is list them in all the biggest marketplaces that allow multiple listings. For example, there are marketplaces that won't let you list it elsewhere. They want like a dedicated type of approach with the domain redirecting, to their website, so forth and so on. While there are marketplaces like Afternic, Cedo, and even Dan.com who don't care if you've listed elsewhere. So it's very important to actually have them listed in all the biggest marketplaces, and also have a dedicated landing page with a make an offer option. And this way you can have full control of your domain portfolio, and basically just having them exposed to the world gives you the opportunity to feel if there is demand. And in the domaining world, you can't really make it if you don't own a portfolio, because most of the time you'll make a sale, and that sale is going to make up for the renewal of all your portfolio throughout that year. And it makes sense to keep going. And your second sale is going to be profitable. if you make it.
It's like venture capital. I mean, you make 100 bets and like two of them pay off and pay for everything 10 times over.
Yeah, it's a game of small bets, and usually all you need is a unicorn to renew all your domains and just keep going, and just make small bets and try to increase your chances of just selling the good names. And obviously, you need a spring sale once in a while. You've kept domain for years, and there is no other means to sell them, and you either let it go or you trade them, or there are other means to get rid of them. But usually, yeah, it requires some kind of trimming or spring cleaning once in a while.
That makes sense. So you've definitely followed this market extremely well. How have you noticed domain investing kind of changing over the years? Presumably, it's become a lot more institutionalized. Presumably, investors are getting a lot smarter with on the acquisition side. But what have you noticed? How have you seen domain investing change over time?
Well, it did change a lot. Like more demand, obviously more sales, more educated buyers, more educated institutional buyers, obviously, and more sellers. Way more clarity over the aftermarket of domain names in general. Domain prices have gone up due to the demand, and the fact that both investors and a good part of the buyers do realize the importance of a good brandable premium, domain name just makes the industry move forward, escalate, grow. For example, Microsoft just acquired, I'm not sure, just like recently, like this year probably, acquired Teams.com, and Namecheap made a strategic acquisition of Wolf.com. And there is really and they made it seem like it's a strategic acquisition for a potential future product. But most domain investors believe they just, hoarding good domain names, because at the end of the day, there is just one single wolf.com in this world, in this universe. Even in a parallel universe, there's just one single wolf.com. So the scarcity of these domain names is absolutely fantastic. It's huge. It's just, you can't really imagine how valuable some of these domain names are. So big corporations, during their growth, even startups, they tend to acquire domains which are extremely relevant. And some of them even get traffic. For example, Teams.com, I bet, has a lot of direct type-in traffic. People just not knowing where it leads to, but they will search for Teams.com, maybe looking for, an alternative to Slack or some other software. So the domain industry is changing really, really fast, and the demand for good domains is increasing, especially the rare ones, especially the dictionary name ones.
The dictionary names, the under 5 characters, the real words, the
pronounceable ones.
That's always a big one. Yeah, God. The ones without dashes in the middle, that's always, And it's funny because, you take like a 4-letter word.com, it could be that it's valuable in its own right because it's a rare 4-letter dictionary word and a .com. It also could be that there's a company that's just going to want that someday. I think of like Zoom, right? Everyone's into Zoom now, of course. And for the longest time, Zoom, they didn't own Zoom.com. They just had Zoom.us. And I mean, even when they went public, they were a global company by that point. It was still just Zoom.us. But they finally bit that bullet. I don't know what they paid for Zoom.com, but you better believe they finally had the cash for it. And, that seller had a pretty great day. That's for sure. So, the companies always come around to the .com when they get cashed up. It always happens like clockwork.
Yeah, absolutely. A really big rebranding, recent one, was TransferWise moving to Wise.com.
I saw that, yeah.
And that's really interesting because, it just proves that there's like big companies who want to, like, I recently posted a really interesting quote by Frank Schilling, who was the founder of Uniregistry and well-known domain investor, and GoDaddy recently acquired Uniregistry. And he basically says, like, picking a good domain name will lower your long-term marketing costs by a lot. Like, be very smart and be very careful when you make, that domain acquisition, and you kind of find a means to make it, really, really targeted to your company. Like, think well before you invest in a domain name, because most of the time people will just think that's too expensive, but they do not take into account the real expenses of marketing a bad domain name or a name that doesn't really resemble their business or doesn't go along with their marketing message.
Yeah, it's the domain name just has to make sense. There's no hard and fast rules about when a domain doesn't make sense, but it's like, it when you see it, right? We've all seen good companies, and you look at the domain, you're like, oh man, that's the domain. Good luck with that. Like maybe it sounds similar to another company, or maybe it's got an unfortunate dash in there, or maybe there's like a Y when it should be an I, and it's just, you just know it's going to cause long-term problems for them. It's tricky. It's really tricky. All right. So we've talked a lot about domain investing, and what I would love to do now is talk about the new trend with domain investing. And so there's a lot of trends, but the biggest one is this trend around aged domains. So it's a big trend. There's also kind of a lot of confusion about what exactly an age domain is. Some people call them age domains. Others, it's pre-owned. I've also heard the term SEO domains. So what exactly are aged domains?
Yeah, so we've already addressed or partially addressed the life cycle of a domain name. And an age domain is just a domain with history. And throughout that age and history, good domain names, good age domain names manage to get valuable, references, mentions, backlinks. Usually these domains used to belong, to various startups, organizations, companies, entities, and they manage to harness a lot of value in terms of value that can be used, for SEO purposes throughout those years. So most of the time we're talking about domains with a history and domains which manage throughout time and age to harness a good chunk of very, very quality references, backlinks, and most of the time we're talking about traffic, relevant traffic that you can use for your startup. So imagine some people compare age domains to abandoned real estate. I wouldn't really say abandoned because we're talking about a market of buying and selling. Some of these domain names are acquired via auctions, which companies like GoDaddy auctions do. Other times it's just a trade in between investors and the final buyer. But most of the time, age domains are just domains that have history, that had something developed or had a company or a project or an idea developed before you took or claim ownership of the domains. And the reason some people call them expired domains is just because a portion of these domains come from auctions, from the expired domains auctions. Some people call them pre-owned because they had a different owner in the past. Then we have the crowd that calls them SEO domain names because they have SEO value. But at the end of the day, it's the age of the domain name which allowed them, to harness all that value, either historical value, backlink value, traffic value.
And so for those who may not understand, I think it's good to kind of maybe like give an example of how valuable an age domain can be and what makes it so valuable. So you talked about all of these inbound links, or what we call link juice, right? Why is it valuable to have a domain that comes chock full of this link juice? Why is it valuable to have a domain that has a bunch of backlinks pointing to it?
Well, first of all, those backlinks are worth something. Like even going beyond the fact that they will help your SEO, they will help with all sorts of ranking signals in Google. They will help with your trust, because most of the really good backlinks that are still powering some of the highest quality domain names, they are backlinks which use the brand name as anchor text. So all those signals can help you rank faster. But beyond ranking fast and beyond all the beyond the SEO aspect of an age domain name, those backlinks, those references, those mentions on really big websites like starting with NewYorkTimes.com, Entrepreneur, Forbes, TechCrunch, there was something. There was a lot of money, because if we were to study the market of buying and selling those links, you would be looking at tens of thousands of dollars spent on buying those links. And if we were to focus our attention on what's really needed in order to successfully rank a website and get a lot of visibility in the search engines, it's all about building a proper site, content planning, understanding technical SEO, and then acquire links. Like how you acquire those links, either by having an extraordinary marketing team, buzzing the word, creating a huge brand, having people talk about link to your site, or acquiring those links in a more gray hat manner. It doesn't really matter. What matters is that the backlink profile, getting those links costs a lot of money. And H domains just have them by default. Like when we cherry pick, when we handpick these domains, we want them to be in both, brandable premium domains which we can use to rebrand to, domains which hold intrinsic value, and you also want them, packed with valuable links authority. And most of the time you have, traffic coming through those links. So it's a double win.
The metaphor I like for this is it's a way to fast forward the process of building out your own company, your own brand. It's like buying land that already has a foundation for a house. Like the foundation's already poured. A lot of people don't realize when you start a website from scratch. I take alternative assets, for example. Like we started that domain from scratch. No one had ever owned that domain before, alternativeassets.club. No one had ever owned it before, which is fine. But you're in the what we call the Google penalty box, so to speak, for the first. It can be months. Like I don't remember exactly how long it took us to start ranking, but at least 3 to 4 months. The first 3 to 4 months, you basically get no organic traffic from Google at all, right? And even 5-6 months in, it's still starts to trickle in, but it takes a long time. Is the point, right? After about a year or so, you really start to see things ramp up, and that's great. But what these age domains do is you basically just fast forward all of that time because Google already knows the domain. It has a history. It has backlinks. It has maybe some traffic still. Some traffic is always even better. But the point is, it's like you don't have to start from scratch. There's no sandbox. There's no waiting period. And hopefully, not only is there no waiting period, but that you've already earned the trust. That's the way, theoretically, at least it goes. You've already earned the trust with Google because you've already got, let's say, Forbes pointing to you or CNN pointing to you, and you didn't have to do anything.
So most of our clients prefer focusing on actually building their website, creating awesome content, not worry about backlinks, not worrying about promoting, not worrying about acquiring those links in the first place. So they're focused on their product, they're focused on building the sites, they're focused on writing content, and they kind of stay away from all the worries related to building links, because that's a very frustrating process. If you were ever involved in a link building campaign, it's very, very frustrating, from outreach, to being rejected by, fellow website owners who simply refuse, to link to your site, or just having, a poor, or not having the budget, for a good marketing, so that, big media outlets pick you up. It's something that it's worth paying attention to. You don't have to worry about the link building part. You don't have to worry about getting some awesome links, at least for the first year. So you can focus entirely on your site, on building that product, on building the site, on publishing great content. And most of the time, if you focus on building, and what you're doing in terms of technical SEO, structuring your site, building a good site architecture, building the topical relevancy for your site in terms of content, you just start ranking, naturally, organically, because, as you said, there is so much authority associated with the former entity, and Google just knows that.
That's awesome. And of course, the risk there is that the former entity has to be a good one in Google's eyes, because if the former entity was one that you may not want to be associated with, that can maybe cause some problems for you later on down the line. But of course, most sites are good, most domains are good. And free link juice is always generally, I should say, a good thing.
Well, in fact, most domains are bad. I would like to debate that. Most domains are bad, and free link juice usually doesn't come free, because if you don't know what you're doing, you end up with a trademark domain, or a domain associated with some bad PR, or with a domain that doesn't have organic backlinks. It has artificially or formally abused backlinks. So that's where a curated marketplace like ours, like ODYS, comes into place, because we have a really big team that kind of does the due diligence first, and we even guarantee that the domain doesn't have any penalties, hasn't been abused in the past, and has absolutely natural links. So it's very, very important. It's something that will learn throughout the years. It's not like you can go to GoDaddy Auction and every domain you get is going to be packed, with juicy backlinks that are natural and guarantee not to get you in trouble.
Now that's really interesting. So let's shift gears a bit and let's talk about ODYS. So how does ODYS work? ODYS you said it's curated marketplace. So it's there's a team involved here. There's due diligence. How does ODYS work exactly?
We basically monitor the whole aftermarket of domain names, and we filter it through our own software, and we try to identify, the best domains on a daily basis. Like, we process hundreds of thousands of domains on a daily basis, and we try to, invest in the best ones, for our members, and just, list them for sale. But an important part is just showcasing the real intrinsic value of these domain names, and we just try to make it as explicit as possible. We try to bring as much transparency and just show where the value is by displaying, the most valuable links, by explaining the value of the name, the relevancy. We even monitor traffic for these domain names. We want to make sure these have been indexed in search engine throughout their lifetime. So we just want to make sure we have very, very strict, quality standards for every domain we invest in. And right now it has been like a one-way highway in terms of investing. So we've been selling our own domains, but something that we're looking forward to launching in the next quarter is, allowing our own members and third-party entities to list their domain names for sale via ODYS. So if you have a domain name that matches our quality standards, you'll be able to list it for sale in our marketplace. So we just want to bring more liquidity and also allow investors to kind of buy a domain name from ODYS and immediately list it for sale again.
That's exciting, man. That is super, super exciting. So just to be clear, today, the vast majority or all of your inventory, you guys are purchasing these domains yourself.
Yeah, we're investing our own money. Yeah.
So you're investing your own capital. The marketplace is full of not only pre-linked domains with link juice, but they're also pre-vetted. They've gone through due diligence. You use your expertise to figure out which ones are the best ones to buy, and that's what's populating your marketplace. And then you're saying in the future, you want it to be an open marketplace, a peer-to-peer marketplace.
Yeah, we even launched a new version of the marketplace that says in the header, like, we have 3 different options where it says like sell domains, buy domains, and pre-order domains. So with sell domains, you'll be able to immediately list your domain names for sale as long as they adhere to our quality standards.
So who are the typical buyers right now that you guys are seeing? Are they, are you selling to individuals or like agencies, or is it kind of like a mix of both?
It's a mix of both. And it's really interesting because we started with, people who are interested into SEO. We started with affiliate marketers because these are the folks that want to get, a head start over the competition. But as we moved forward, as we progressed as a startup, we've started noticing a lot of interest, because one of the criteria of investing in our own domain names is picking up great names. So we inevitably stumbled upon, acquiring domain names that have a lot of intrinsic value solely based on the name itself. So we started selling to people that aren't necessarily interested in the, SEO aspect of these domain names, just as good names. And a third kind of type of crowd that we've recently started, dealing with, were the people that were interested in the historical aspect of the domain name, so more like a collectible. So let's say someone was involved in a startup or used to be a client of a particular startup. Now that startup went bust, but it still had a history, and that person kind of, was all over it, like a brewery, for example, right? And we managed to acquire that domain name, we own it, and he was a big fan of that domain name, and he just came to ODYS and purchased the domain name for us because he just wants to own the domain name of that company,
That's interesting. And I love the framing a digital collectible, right? It's, it's kind of a new way of thinking about domains, but you're absolutely right. They are digital collectibles. They have intrinsic value as well as extrinsic value. And I really like that framing. It's interesting.
Especially right now when we are riding, the NFT wave, and everyone being really fond of the whole concept of non-fungible tokens. Well, what I have to say is that, the domains are the original NFTs on the web. The only difference is they're not on a blockchain. They're not, decentralized. They're owned by, some big corporations, but nevertheless, they're absolutely unique. And, big domain investors have been holding to their domain names And especially the ones that they refuse to sell, they treat them as digital collectibles. Like they see value in that, but there is no way they're going to sell that. It's way too it's beyond money, to sell some of those domain names.
The valuation side is something that I'm just so fascinated about with this market. How do you guys think about valuations? You've got expertise, you've got due diligence, and you can look at the backlink profile for every single domain before you add it to your inventory. But like, what factors kind of go into your valuations? Is it just domain authority, or is it a combination of domain authority and the number of the backlink profile? Like, how much do the backlinks weigh in? What can you tell us about kind of what goes into your own valuations?
So right now, if you go to ODYS and study our marketplace, you're going to see the price the domain sell for, and you're going to see a metric we called ODYS, or ODYS value. So the ODYS value is a mix of factors. And one of the most important factors is obviously the domain name itself. And we use some data from tools like STBot or GoDaddy Appraisal, but that is like not even close to the real value of the domain name, which usually comes from the amount of money you would have had to spend on backlinks, on the authority backlinks. So say we have a domain that is worth, that is being sold for $1,000. But if you look at the backlink profile, it has links from big websites like TechCrunch.com, from Forbes. And getting those links alone would have required, tens of thousands of dollars. Not to mention the price of every backlink. So say a domain with 100 referring domains, like unique referring domains. I'm not even talking about the total amount of backlinks. So 100 unique referring domains with a minimum price of $20 per link, which a lot of people have been telling me that's like way too conservative. Like you should be looking at least at $200 for a permanent backlinks. That's already worth like $20,000 alone. Like we are more on the conservative side, and we say, okay, so the backlink profile is worth at least $2,000 if you were to buy those links on your own, which is much more, but we just try to, be really humble about that and just, try to keep it to a minimum. And then if you take into account the biggest links, like the highest authority links the domain have, like let's say TechCrunch or Forbes, or let's say, some big media. Not to mention that in some cases, those links, if you were to address, or to reach out to those companies, they are absolutely impossible to get. So it's really difficult to measure how much, or to try to figure out how much you would have to pay, because they don't sell any links. And just getting mentioned on that website is like a big deal.
So you guys are basically starting from the point of trying to understand the value of the backlinks. And like you say, so you say TechCrunch, for example, you actually can get a link from TechCrunch if you're willing to pony up. I was not unofficially quoted about $20,000 to get a link from TechCrunch, that is. So, but that's still tricky, because you can't just say, oh, okay, well this domain has a backlink from TechCrunch worth $20,000, so thus the domain is worth $20,000. So clearly there's a lot more to it than that. I'm sure you have a proprietary algorithm.
Yeah, so the pricing itself is based on our own acquisition pricing, So how much we paid for it, plus, our margin and our own. But when we evaluate how much it might be worth, so generally speaking, the value of the domain. So value of the domain doesn't reflect on the pricing. So the pricing can be $1,000 or $2,000 for a great domain name, but we have ODYS value in like, $20,000.
That makes total sense. So the ODYS value is what it's truly worth. And,
yeah, what we estimate it to be worth. Yeah, considering factors like what you would have to pay for a backlink or a mention on a big website or a media outlet, its traffic, let's say, comparable sales in terms of the name of the domain, all that adds up. But the price of the domain isn't $20,000. The price of the domain is based on what we paid for the domain to secure it in the first place.
And your decision to secure it is presumably based off of, some formula you have based on the actual value, I would imagine.
Yeah, obviously. Plus, there are domains, strictly related to some niches which are more scarce. And obviously, though, those sell for more, but they sell for more not because we base our pricing on the evaluation, we base our pricing on our own acquisition. So if we had to pay more to get it in the first place, it's going to cost more.
Got it.
Regardless of how much we evaluate it for. Because the whole purpose of ODYS value and showing the value is just showing how much intrinsic value you get. Like most of our domains have traffic, like 99% of all the ODYS domains have traffic. Like if you're buying a domain about, let's say, pillows or mattresses, and it has relevant traffic from websites that are linking to you, and those are relevant websites. We have a case when someone acquired a domain to build a pillow-related website, pillow mattresses, and he started making sales without even ranking. That because the domain name already had traffic, and that traffic is worth something. So it's really an interesting, way to look at it. Like, how much is the traffic that the domain still has worth? How much is the backlink profile the domain has worth? And then you add up the name, and then you add up all the trust signals, and and you come up with ODYS value as the evaluation for the domain.
It's so cool. I love it. It's kind of what we're trying to do with our alternative assets, with our inferred value for NFTs, IPOs. Basically, you kind of just start down that exact same path of like, what is this truly worth? And then you just kind of start applying your discount models and triangulating a price that makes sense. But you got to start somewhere. You just got to an exercise and doing it over and over. And not every domain you have is going to sell. And maybe let's talk about that a little bit. So, I'm sure that there's plenty of domains that you guys have purchased, and the fish just aren't biting on those ones. What do you do with those? Are you in the business of kind of keeping those up in the marketplace forever? Or are you tied to them, or are you thinking about ways to release those back into the wild, so to speak?
We actually rarely let any domains expire or release them back to the market. That's because we never invest in domain names that we wouldn't use ourselves for building a website or a project. So whenever we see a domain name, whenever we find a really good domain name worth of investing in, we kind of have an idea, development idea, business idea for that domain name. And the way it usually works with ODYS, even though not publicly stated, is we would have a certain time frame throughout which we give the domain a chance to sell via the marketplace. If it doesn't sell, we remove it from the marketplace and we start building our own websites. Like in most of the cases, we're talking about affiliate sites, but in some other cases we have we're strategically acquiring domains for, it really depends on the niche. If talking about SEO, talking about domains related to the domaining industry, we're getting those for our own business. Like those are way too valuable to just keep forever, for sale. They have to be put to use. So right now, one of the ways I like to tackle this is we have skin in the game with these domains. We would never invest in a domain name that we don't have a development plan for. That's why we just don't buy, thousands of domains. We handpick the very best ones. And that's why with every domain name that you see listed for sale in ODYS, you have a monetization angle, you have a type of business idea that we kind of suggest, and we can even help you build that site. So if you don't want it, we want it back because it's too valuable to just let it go, expire. So we won't buy stuff that we are not fully, convinced of.
One thing I love about this market and this industry is how it kind of reverses the traditional approach to building a business. What I mean by that is most people wait for inspiration to come and then go out and, register a domain name and kind of start from scratch. And that's fine. There's nothing wrong with that. But what I love about this is if you just kind of flip that on its head and just let the inspiration come to you based on the domain name, and then just create a business around that. It's like if you see a domain name called stopblisters.com, you may not be passionate about blisters, but that's a great domain name. Now, if that's got link juice and everything attached to it, my God, that's even better. You could very easily build a business around stopblisters.com, and that's just one example. So it's just kind of interesting. It kind of, people don't really tend to think like that when they're thinking about, becoming an entrepreneur, but it's just as valuable of an approach as anything else. I really like it.
Yeah, exactly. Right now we have our regular members. We have regular members that are buying from ODYS, and some of them already have a business. Like, let's say you have like the podcast, the whole business around alternative assets. And let's say you find a domain which was a former domain of a business, of a business, of a podcast, let's say of a blog, which talked exclusively about alternative assets, and it still has traffic, and it still have links, and it still have, has mentions on plenty of. It would be a really good idea to kind of take it and merge it with your own business. So sometimes like most of our buyers are people who already have a business, and they just want to strengthen it. They want to build more entities like satellite sites, to funnel in traffic, to kind of merge it with their business. On the other hand, we're also a marketplace of business ideas. Someone may have heard or explicitly knows that it's easier to rank with an H domain, and he just logs into his ODYS account and just scrolls through the domains, uses the filter to find new business ideas, and he just finds an excellent, let's say, pets related domains, and he decided to go into that because he was just about to buy a cat, and while still owning a cat, why not launch a site about cats, since he's passionate about that stuff. So it also becomes a marketplace of ideas, besides just being a marketplace for domains, which you can use for your existing business.
So let's talk about some of the other strategies around age domains. We've talked about the primary strategy, which is you take an age domain, you've already got the foundation, and then it's much easier to build a house and to build a second story of that house quicker. So that's the primary strategy. But there's also some strategies with what we call 301 redirects, which is where you take an age domain, but you don't use it as your primary, house, so to speak. What you do is you just redirect the link juice and redirect the traffic that age domain is getting into your primary domain, into your primary house. What can you tell us about the 301 redirect strategy, and maybe some other similar strategies around PBNs or private blog networks?
Well, I like to keep PBNs separate from anything related to ODYS because it's more of a link building type of business, and not solely related to domain names as domain names with intrinsic value. Like when it comes to investing in domain names, age domain names, like 301 redirects are just an amazing way to harness all that power. But even though I'm an SEO by heart, I like to kind of look beyond the SEO aspect of 301 redirecting for strengthening your website, because most of the time when you're building a business, you want to use every means possible to kind of strengthen it up, to gain an advantage over your competitors. So for example, in your case with alternative assets, like I would suggest to look for domains that are related to investing, not necessarily alternative assets investing, but investing in general, maybe alternative assets if you can find any. And by 301 redirecting them to your site, you can tap into potential investors, buyers, more subscribers to your newsletter, like all sorts of interesting things may happen from there. But obviously you also harness the power of backlinks and the references it has, because all those get pushed to, redirected, forwarded to your existing site. And obviously that's a good signal. So 301 redirects beyond SEO, just an amazing means, of getting extra traction, traffic, trust. Like I said, Microsoft acquired Teams.com, but it didn't acquire it for a development project. Teams.com now redirects to Microsoft Teams, which is Microsoft.com/Teams or something like that. It's the same for these are strategic acquisition. And 301 is just a means of, redirecting, the existing traffic. And by that means also links, to your existing site and just strengthening whatever you're working on. So in terms of PBNs, PBNs are probably worth talking about in a different podcast, because what ODYS does, we focus on the domain investing aspect of things, because PBNs are mostly related to just, exploiting the short-term benefit of link juice, strengthening up a project. With 301 redirects as a link acquisition method, it just far more, valuable and faster, and just I view it like a next level type of link building, because when you redirect a domain that is powered by, let's say, 100 unique referring domains, valuable unique referring domains to your site, you instantly get 100 unique referring domains, and that it brings a huge amount of value to your project.
The 301 stuff is really fascinating. I've never 301 redirected a site into alternative assets. I did recently buy a similar website. It was a peer-to-peer lending site based in the EU. It's called thepoorinvestor.eu, and it's a peer-to-peer lending review site. But I didn't 301 redirect the traffic because I had read that there was some risks in doing that, and I was kind of just enjoying the traffic that the site was getting, and I got it for a good price, and so I haven't really pulled that trigger yet. Are there risks with doing 301 redirects, or is it pretty safe?
The only real risks I see in terms of redirecting a domain is if you're buying a domain which is trademarked or can get you in legal trouble. Other than that, I find it perfectly safe.
Or not in the same niche, right? That I've heard that can hurt as well.
Yeah, but in your case, what you can do is write an article about investing in peer-to-peer lending companies, right? And then 301 redirecting this domain, which was a former or website, if you don't plan to have it around and further grow it, if you don't plan to bring it to the next level, you can just take it and 301 redirect it with all its traffic and links and whatever it brings with it to your article about P2P lending. And that would be like the perfect landing page. And you could get those visitors interested in your other stuff as well. So it doesn't ruin the visitor experience, and it just makes perfect sense even for Google, for crawlers, for search engine bots, because they're coming from a site related to P2P lending, and they end up on an article which talks exactly about that. So perfect relevancy makes sense for everyone. It doesn't ruin the user experience.
Yeah, I definitely want to learn more about the process. It seems like next level, and but I definitely see the value in it. Very cool. So I noticed that you guys have switched to doing kind of logos. You've started to add logos for the names in the database, because it's similar to like what Brand Bucket does or Squad Help does, where the buyers are now buying not just a domain name full of link juice, but almost like a brand. You're buying a logo, you're buying a domain full of link juice. You're really giving yourself a great head start. It's a great value add. How's that working out for you guys so far?
Our goal is to help every single domain investor that is using ODYS to acquire an H domain, to get a head start of the competition. And usually that head start is all about timing. So if it takes 3 days to get a logo done and we can do it for you in advance, we'll do it. If it takes like a day to figure out the best hosting you can use for your domains, we'll figure that out as well. Our goal is to fast forward you to launching your website. So that's why we provide the logo. Beyond that, the industry has evolved from sellers offering domains name for sale in an Excel spreadsheet and just letting you pick the ones you want, from actually bringing them to a marketplace where you look at the domain names, and sometimes it's just about the chemistry in between you and the domain name. Sometimes that logo can resemble something that you get attached to. Sometimes that logo can help you get a better vision for the project, for the business idea for that particular domain. And beyond that, it's just easier to remember. You can figure out if you can build a brand or you can use the logo. But at the end of the day, the original intent was to help our buyers just get traction faster. But there are multiple things associated with getting that logo, because it's just visually more enticing and easier to navigate through a marketplace where domain names have some kind of personality attached to them and aren't just data entered in a spreadsheet.
It's cool. I like the way you're thinking about it. Like, you guys are really in the business of not necessarily selling domain names, but kickstarting someone's dreams, right? And everything you can do to help that is part of the value prop. Domains are a huge part of that, of course. Really the fundamental cornerstone. But there's other things involved. There's hosting, like you said, there's a brand, there's logo. So I like the way you're kind of thinking through that and packaging it all up. Really cool.
Yeah, thanks. I mean, there's really our goal is, never-ending improvement. We'll keep delivering value. We'll keep figuring out ways, to showcase the value, because when we showcase something specific about a domain, we don't actually invent it or fake it. There is no way to do that, especially, for the keen investor. At the end of the day, it's all about just showing what's there by default for a domain name that we've managed to secure. So a logo, all a logo does is just enhance the experience when interacting with that domain name,
So in terms of the future, what does the future hold? This is kind of like a two-part question to finish things off, but one, where do you see domain investing going, right? What do you see happening in the next few years and just in the space at large? And then just as importantly, what do you guys have cooking up at ODYS? What's next for you guys? What are you thinking? What can we expect from the future of ODYS?
I think domain name as an industry is just getting started. It's just getting warmed up, because as we've seen past, the COVID crisis, everyone can go digital. There's a means, especially for the online business, to operate strictly from home, and a digital presence is more important than ever. And domain names, due to scarcity, especially in extensions like .coms, are becoming more and more valuable. More and more companies are starting to realize the real value beyond, having a presence, and not just any presence, with a dash or with a .net or with a let's say biz or any other, fancy extension, but a solid brand. That's why I see the domaining industry involving more great products like den.com being developed, a more liquid marketplace for buying and selling domain names, more educated buyers, and obviously just the industry reaching new heights, especially with startups like Unstoppable Domain Names, but those are a little bit early in my opinion. But nevertheless, the industry is moving forward at a very fast pace. In terms of ODYS, we have a lot of good stuff cooking, like some of the things that I cannot publicly announce yet, but nevertheless, I already did with the ability, the functionality of selling your own domain. So we'll allow our investors to buy a domain name and immediately list it for sale in the exact same marketplace, just because we already have the traffic, the buyers. Maybe if you don't have an immediate development plan or resources, you can just buy and relist it for sale. You can add your own markup, and if it's a sale, you can make some money. If it doesn't sell, at least it's exposed to something. It just doesn't just sit in your registrar, and do nothing. And we have a lot of cool functionality coming up, but some of which I cannot reveal right now because it's not yet ready. Plus, it can be really enticing for our competitors, to find out, and I don't want that to happen.
Well, Alex, I want to say thank you so much for joining today. I think we had a great time talking about what is truly a fantastic alternative asset. And I think the phrase you use, which I really love, is domains are a great digital collectible. And the world that you're in specifically with age domains is super exciting. I love the metaphor of, fast forwarding the building of a house, getting your traction faster, skipping the sandbox, and getting down to business, focusing on what really matters much, much faster. So we look forward to seeing the space evolve. We especially look forward to seeing how ODYS evolves, and that includes the peer-to-peer marketplace. Super exciting. Thank you once again.
Thank you. It's been great talking to you.
All right. Take care, bud.
Take care.
Thanks for tuning in. We sure hope you enjoyed this episode. And if you did, please be sure to subscribe and give us a nice review for this podcast. It means a lot. And remember, you can find a transcription of this episode, along with all past issues of our weekly newsletter, at our website, alternativeassets.club. See you next time.